So, Trump putting out deadlines to all nations with deals that they want to make with the US. But we got some things that are brewing behind the scenes. And I think that the tariffs and all of that madness is taking center stage. And there are a few things that are brewing that could lead to a little bit of a problem. Tonight's live, I'm just going to break it all down for you so you guys have a bit of an understanding on what we are likely to experience in the near future. Powell's speech today, it's like, it felt like it was a librarian letting everybody know about where the books were if you wanted to read anything about the economy. It was the worst speech ever, and it happened so fast. I was contemplating actually going live for it, but it was just a little bit of a celebration. Woohoo, 75 years and what have you. Let me just kiss some of this ass of this whatever. Oh, it was just so stupid. But anyways, didn't give us nothing. And never mind. So let's get straight to it, ladies and gentlemen, and understand exactly what is going on, because it's been a bit of a weird day today. Bitcoin has just done nothing. Sailors bought some more Bitcoin. And MicroStrategy stock has fallen as well. But a lot of the marketplace right now is waiting to hear and see what the impact is with these trade deals. And remember, Trump's all about the deals, and any deal that he gets, he will celebrate. But the market is going to react differently to it because we're going into stagflation, according to a couple of sources across the street. But never mind. It's all about what the market thinks. So with that being said, ladies and gentlemen, let's get with the program and break it all down for you. So this is it. Trade deadline. Trump administration asks countries to submit their best trade offer by Wednesday. That effectively means that whatever happens when the deadline's enforced, the markets might go up, the markets might go down, but then there's going to be countermeasures that come into play. The Eurozone is already preparing for that. So regardless, Trump's going to be sat down at his desk and he's going to see China wants this, Euro wants that, Canada wants this, Mexico wants that, India wants this, and Trump's going to be like, yes, no, yes, no, yes, no, which is naturally going to then fuel more instability in the marketplace. Again, back to the $7 trillion that's been parked in the ETF funds. That's still climbing. And as long as they're generating yield, then that's all good. So whilst all this has been happening, we've got a couple of situations right now in terms of the Asian markets. Check this out. I was tagged earlier on by Jimmy the Patriot. What's good, bro? And Finance a Lot has come out with this story. It says here that all eyes are on Japan this week as interventions ramp up in the bond market. Now, if you remember, Jamie Dimon was talking about there's a crack in the bonds market. Well, you'd associate the idea that Jamie Dimon was making reference to the US bond market. But what if he's actually talking about the Japanese bond market? What if he's actually making reference to the fact that Japan is still the largest holder of US debt? So maybe it's all intertwined. Goes on to say this. The Bank of Japan is freaking out because a stronger yen collapses the yen carry trade that's fueling the US stocks. How does it collapse it? It collapses it by Bank of Japan increasing their interest rates. Because then it means it's more expensive for these yen carry traders to keep a hold on the yen that they've borrowed against the US dollar. Right? It says here, problem is buying Japanese bonds pulls liquidity out of the US and puts pressure on the US treasuries. This is true. So when you force investors to consolidate positions in dollar to go back into the yen, what happens is when a country increases their interest rates, it naturally warrants the idea of investors getting yield over there. But then what about the investors that have already borrowed money at the rates that Japan is currently at? So it can lead to a little bit of a problem. You can see already the 10-year yield right here is trading at significant highs. And there was an article that went on to say that if the yen's yields are too high, it can grossly affect their GDP. So they're going to have to do something. Okay? So if they do increase the interest rates, investors are going to plow into Japanese bonds, okay, because they want to take advantage of that. So that means they're going to come out of US bonds and go over there. But the yields on the US are going up, aren't they? They're already high. But the problem is to borrow dollars to do that kind of puts them in a bit of a compromising situation. So then it naturally then sends investors to say, hold on a second, the yen is going to cost a little bit more money to hold in terms of the carry. Let me withdraw that and go into the bond market of the Japanese yen to offset that idea. But you've got to sell the stock in the US first to do that, which then depletes the US dollar and sends that down even more. When we go and have a look at the markets and we say to ourselves, okay, look, Bitcoin just hasn't done anything today. The euro flying up. And tomorrow they're going to be doing their interest rate. Well, they're going to be mentioning the idea of an interest rate cut. They want to cut their rates again. So that's naturally going to fuel investors to go and borrow euros. Remember, you can take advantage of a nation's interest rates by the yield that it can generate for you. And also if you borrow that currency and how you put that to work. What's going on now is investors are going into euro bonds. They're going into European stock, which is why you're seeing the clear disparity between the NASDAQ going down in principle against the US dollar. And when you look at the euro against the US dollar, you can see investors are like, why am I wasting my time buying stock in the US? Which then justifies the idea that maybe smart money is actually offloading into retail as prices are rising. Okay? When we look at this little thing down here, we're at a midpoint, so that could actually change. And retail is very optimistic about things right now. So they've hit an extreme, but this hasn't hit an extreme yet, which is the blue line that we need to pay attention to. So that's happening in Japan. What about in Hong Kong? New World's distress worsens after delay on bond interest. Check this out. It says here, New World is grappling with $28 billion worth of liabilities, said in its filing, and it's postponing the $77.2 million worth of debt obligations. That's already a crack. That is a problem. You're not able to meet the liabilities. Hey, that's not looking good. And we already know that China's got a problem overall with everything. So you've got two nations right now. Only one of them is really a problem for the United States, and that's the Bank of Japan, because investors take advantage of the fact that the yen is so deflated, it's so cheap to borrow, and it's cheap to just put to work. Bank of Japan is the problem. This story here for China, it's just like, well, never mind. That's the sad truth about it. And Trump doesn't care. He really doesn't. Because he won't be doing these tariffs or these sanctions on China. So you're really pushing the sleeping dragon into a corner. Something's going to break. But I think that if there's ever going to be a war with regards to the US, it's not going to be a physical war where let's get some tanks in and start doing some things. No, it's going to be a financial war. Economic imperialism is really what the goal is for every nation out there. But the best way to screw it to the US is to devalue its currency. Force it into a very interesting predicament. And that's already happening because based on this, there's a problem. And that's going to naturally hurt the US treasuries. So Dimon pretty much does say that there's going to be a crack in the bond market. It's all going to be based on what the Bank of Japan decide to do, because if they do increase their interest rates, your dollar's going to get smacked as bad. I can't even say anything, ladies and gentlemen. I really can't. So what does that mean for you guys in cryptocurrency? Well, looking at Bitcoin, it's trading pretty much flat for the day. It's not done anything. It is traded lower. You've got Ethereum just blowing it out of the park, but not really doing anything. It's just made a move up to only bring it back down, staying within the ranges. Then you've got Solana just slowly bleeding to the downside, a very, very contained range today. The stars of the show are, of course, Euro. And then you got gold. Look at gold, man. It's just not stopped, and it just keeps on going up. And it's heading towards its all-time high, near enough. Because investors are looking for safety, and that stability right there is demonstrated with the bonds trading now nearly 0.34%, 5 years up 1%, 10 years up 0.9%. It was actually up quite a bit from today, to be fair. And then the 30 years still at 0.9%, but it was actually higher earlier on. So you can see already that investors are a little bit concerned about things, but the volatility index is effectively broken. That's going lower. Well, that explains with the NASDAQ moving up. So there is complacency, and we can justify that with the smart money, dumb money chart, where dumb money right now is overly optimistic about things. Is now a time to be optimistic? Well, yeah, because look, Michael Saylor's bought some more Bitcoin. Happy days. It says here that strategy increases their Bitcoin treasury by 705 Bitcoin. So here's the statistics. Takes on 705 Bitcoin and achieves a Bitcoin yield of 16.9% year to date. Now holds 580,955 Bitcoin. You've probably seen the posts where BlackRock has offloaded around 3,000 Bitcoin or around $420 million worth of Bitcoin. But it looks like it's happening across the border. We got a couple of investments into, or deposits into Coinbase. So it's one of them ones where you're asking yourself, okay, what are the chances that Bitcoin's going to pull back? Well, Bitcoin will pull back, and it's not a problem if Bitcoin does pull back. And if you're naive to think that Bitcoin can only go up, well, yeah, over a period of time, naturally, it's going to do that. But in my opinion, I think we've got ourselves a very interesting range right here with Bitcoin. And it's back inside of the zone where it last consolidated from when it made the move to the upside. But the issue that I've got is this. Bitcoin needs to spend more time consolidating to justify movement to the upside. It needs to spend a lot of time. And I've said this before. If you look at the last consolidation that Bitcoin went through before it made its all-time high at 70,000, that was this point right here. This range. This was the longest time it spent at the all-time highs consolidating. Look at this. Didn't really spend that much time, pulled back aggressively. Now it's moved up and it's now pulling back down again. And it's only 7% away from its all-time high, which is not bad when you think about it. But if Bitcoin is going to continue with its narrative higher, given that when you look at it, when you really look at it, you can tell that the consolidation didn't really grab that much. Think about it. Look at this. Look at the amount of clearance that the all-time high achieved. It only managed to clear its previous all-time high by 2%. Now let's go back and look at the last time it cleared a decent all-time high based on the consolidation. Well, just look at this. From this all-time high, it consolidated, right? We just include the wick to the downside, and it actually managed to net a gain on the breakout of that all-time high of around nearly 40%, okay? From that point, well, not 40%, but it's well, if we actually look at it from, well, no, that's not correct, but you get the idea, okay? The longer the consolidation, the bigger the move. The shorter the consolidation, the less likely the move is going to really give you what you think. Bitcoin will probably come down, and the longer Bitcoin stays inside of this range, the better the move to the upside will be. Now, we've got too many factors that can impact it. Data today came out, 69.4% on the 69.4 on the manufacturing prices. That's good news, because if the manufacturing prices are coming down, that implies that inflation isn't going to be that much of a problem, because manufacturers are actually reducing the costs of goods. That's good news. PMI equally came in lower. So we know the economy is struggling from the manufacturing perspective. And then, of course, the manufacturing prices are going down. So what are they doing? They're effectively trying to encourage the consumer or businesses to purchase. They're trying to get work in. So the only way they can do that is by reducing the cost of their goods, which will naturally then imply that companies are going to manufacturers, ordering things, which naturally should increase the productivity, but it's not. It's actually decreasing it, and that's the result of that. Yeah? Now, the rest of the week, okay, we've got JOLTS job openings coming out tomorrow. That's going to be an eye-opener. They're expecting 7.11, so they're expecting a contraction in this JOLTS. But quite frankly, every time we've had the JOLTS, the ADP, and the non-farm, the data has been flipped. They come out with surprise readings, and it just doesn't make sense. When we've got trends in the data, then yeah, look at it. It's all over the spot. April was 7.19. April the 1st, again, 7.57. Then March was a wild 7.74. And then February, 7.6. And then 8.1. It's just bouncing. And that represents inflation, in my opinion. It represents how sticky inflation is. Questions? US just paused on the tariff on China goods until 31st of August. Tino, what do you think? Is that true? Here we go. Just come through. Yeah. US extends pause on some Chinese goods to 31st of August. The US Trade Representative announced extension on May the 31st. Right. So that logically should... That's what I mean. One thing can just completely flip the market. But does the market like that? Market was already going up. US judge blocks Trump from nixing union bargaining for TSA officers. The Fed will not save us this year. That's the topic of being discussed. Can you say something about crude oil? When crude oil is going up, it's not really going up, $63 a barrel. It's still cheap as chips. I'm expecting crude oil to continue to go down because it's following the dominance of the dollar. You know, it's pretty much there with it all. And that's something you got to take into consideration. The problem is, guys, people are buying stock, right, with a depleting dollar. And that's no good. But the carry trade is on. But the carry trade could unwind very soon because they need them to start buying Japanese bonds. Let's go to the yen. Look at that. Yen is just going for it. Yep, they come back into that vector. So the carry trade is currently being played out. Not yet, sorry. No, it's not. Carry trade isn't happening, sorry. Because if it was, the yen would go down. And because they're selling their product, they're going into yen. So are you witnessing a crash? That's what you're looking at. You're looking at the logic that a crash could be started because the yen's going up. So they know that the yen could actually have an interest rate increase. Because when the yen goes up, the dollar goes down. If the dollar goes down, that means you're selling stock. So why on earth is the stock market going up? Selling it. That's the logic. Gold down, NASDAQ up. I mean, gold is not down. It's up 2.77%. Gold is outperforming the NASDAQ today because NASDAQ is only up 0.91%. You've got to look at it like this, ladies and gentlemen. If you're a fund manager, okay, and your fund is effectively to make money for people, if your stocks are appreciating in value, what you're going to do, you're going to sell it. You're not going to wait for the market to drop for you to start selling it. Doesn't make sense, does it? Only in times of fear, where the market's starting to struggle, where investors like just quickly sell it no matter what. It doesn't matter if it's going up or down, but there is stability in the market right now. So when NASDAQ is making a nice move to the upside, people are offering to sell. Look, same logic holds true with Bitcoin. Go to the 1 hour time frame. The guys that bidded earlier on of 15 million Bitcoin at 104,500, they're probably selling that right now. He might have offloaded half of that position. Look, 7.14. Exactly at the same price point earlier on. Sorry, at 104,500. So 15 million transacted there. And then you've got 7 million transacted there. Just whether it's the same person or not, you can only go by what you're seeing here. You can only make the assumption that maybe he's offloaded half the actual half the position. When we look at it, the market's light. There's not that many offers. There's not that many bids. But the only bids that are coming in, I mean, you've got some bids coming in, 10 million down below. It's a very, very light market. 3.25 million sold there, 7.14 million sold there. And this is the problem that we've got because every time they bid, Bitcoin moves up, they sell it, and then it rolls back down again. So it's like they're trying to quickly sell. Remember that. When prices rise, they're selling because they're hitting the offers. That someone up there wants to sell 105,900, wants to sell $1.9 million worth of Bitcoin. He can only do that if he's got participants coming in buying it. So when you get extensions on Chinese goods, okay, that's good news for the market. But what goods are we talking about? It hasn't said what goods they're talking about, actually. Let me just find that for you. Yeah, it's not saying what goods. But Trump's been putting on too many tariffs in terms of chips to be sold to China, and it's just not looking good like that. Tino, will gold continue up now? up now that the dollar dropped? Or will it catch a local top? And can the US dollar rebound? What do you say? Look, I don't think the US dollar is going to rebound anytime soon. I really don't think, because when we look at it, the dollar's going down and Bitcoin is consolidating. Okay. And what I think is going on, what I think is going on is investors are now, because before dollar was going down, but Bitcoin wasn't going up. Okay. And the problem is because of Bitcoin's cost means you need more dollars to put into Bitcoin to buy it. So you're losing purchasing power. So if you're losing purchasing power, why are you going to go into risky assets? Then you'll then also find that when dollar starts to come up, Bitcoin tends to move up a little bit as well. And when you see that happening, it could be a number of things, but what I think it is the people that see the appreciation of the US dollar increasing, that rally fuels the idea of them using that appreciation to go and buy Bitcoin and not have to pay so much for it in terms of value of dollars they're using. Because if your dollar's going down and your Bitcoin in principle's going up, it's costing you more dollars to purchase it. But if the dollar itself is going up and Bitcoin's going up at the same time, you're taking advantage of the value of your increasing dollar, thus decreasing the actual cost of you buying the Bitcoin in terms of your value of dollar, if it makes sense. Anything else? Tino, XRP to 0, probably. Trump shorting the dollar. Look, the only thing that you guys need to take into consideration, okay, is, of course, the bond market and the fact that, excuse me, oh my days, the euro is going up. Safe haven, gold, safe haven, NASDAQ and the S&P going up. Like, how does that make sense? If investors are seeking safe havens and the investors have got money locked in the ETF, so why would the stock market be moving up? It's bid offer plays, in my opinion. They bid it, buy some, take some. That's all they're doing, okay? But Goldman Sachs expects a 10% increase in the S&P. Isn't that mad? So the S&P could effectively increase in value by 10%. That will take it way above the 6,000, okay? And that'll be interesting. Very close to its all-time high. And you know what? We're probably going to get all-time highs. We probably are. The markets are just going to hear some good news, but it's not factoring in the financially speaking, okay? Macroeconomically speaking, it's not making sense. Okay? That's why you've got 7 trillion stuck in the ETF markets. That's why the markets are so volatile when they shoot up and they come back down again, because no real liquidity is hitting the marketplace. Let me explain. Look. So this, right? Oops, hold on. There we go. So we go into NASDAQ Composite Index, all right? Look at the volume here. Not really that much, you know? And this one candlestick right here, this bar, price action itself wasn't even able to close in the top part of its range. Okay, so you can't really count that as an accumulation day. But a couple of days after that, and even today, look, volume is down today. Volume is down. So that does grant the idea that they're effectively trapping traders. Smart money's not really doing anything in the sense of buying. It's actually selling. And dumb money is optimistic and taking advantage of that. Because you've got value investors and you've also got momentum, market investors that they want the action. And this is a problem. And when you've got things that are building up behind the scenes and the mechanics of how hedge fund managers use money to generate a yield, well, when those things start to change, that's going to have an impact on other asset classes. So to simply say, is Bitcoin going to keep going up? From the perspective of Bitcoin as an asset, yeah, Bitcoin is going to keep going up. But what swings and roundabouts are you going to cross? in order to get to that logic of Bitcoin going to a significant price point. Yeah, it's got a supply. We get all of that. But likewise, BlackRock offloading so much Bitcoin earlier on, what does that tell you? Wall Street's not crypto friendly. When I say that, they don't believe in the idea. They've got a bit of profit. I'm taking it. We have the idea. He has the idea. But when you're seeing him purchasing so much, and then you got MicroStrategy, just quickly go over to MicroStrategy just for a second to look at that stock. Where we at? Yeah, it's not doing great because investors are starting to cotton on to the idea that, okay, this guy isn't stopping. He's just feeding the idea and he's using our cash. So I expect MicroStrategy to come down. I'm looking for it to get to the sub 327. That's what I'm expecting from it. Probably even go even further. It all depends. What time are we on, ladies and gentlemen? 25. Okay. Well, Bitcoin is a risk-on asset and still the NASDAQ is climbing. That's evil. It's the old guard versus the tech bros. This is very true, ladies and gentlemen. So listen. Moving forward, the markets are going to be on a little bit of edge, especially with this news right now. So going into the Asian session tonight, Asia might actually react to this. But investors have sort of gotten onto the idea that data just keeps coming out. They say, yeah, we'll put an extension. We'll remove this. We'll remove that. In the end, investors are going to be like, okay, let's just park the idea of worrying about what he's going to say. We kind of get his Trump playing card with the idea of the tariffs. All you can do, guys, is take advantages of the moments you see price working in your favor. Take the profits, because I can promise you it's going to come straight back down again. And if you notice, certain assets, with the exception of euro, yen, and gold, they're safe haven assets. They will continuously go up as long as we've got this story about tariffs. What's this? Trump administration to eliminate federal protections, banning drilling and mining in Alaska. It's like, this guy is doing absolute madness. But anyways, with that being said, ladies and gentlemen, I hope you've enjoyed tonight's live. It helps you in some way, shape, or form. Remember, safe haven assets like euro, yen, and gold, as long as those are still going up and the dollar is depreciating, any movements that you see in the stock market, take advantage of it. If you're holding stock, take some profits, build the bag, and then prepare to get in on the next bout of volatility. Okay? As much as I want everything to go up, the wheel itself is starting to crumble. We just need to start getting some good news. We need certainly tariffs to just come off the table. All right? With that being said, guys, mad love and respect, and I'll tune into you all tomorrow. Peace.